Hello, is it visible, so?
Yes, yes.
Okay. From the starting, I need to explain little bit. I have left the remaining part. I need to explain right now only.
From like wherever you have to stop from there onwards, you can start.
Okay then. Okay. So in foreign currency, we need to post the document
Okay.
also. So
Okay.
here we.
One thing, just give me a overview within 5 minutes regarding the entire foreign currency transaction and
Oh,
reconciliation account without
okay.
Excel sheet.
Okay. Okay. No problem.
You can you can
Yeah.
open a one more Excel sheet. Click on asset accounting field.
This one is. Is it fine?
No, you can minimize the entire Excel sheet.
Okay. Yeah.
Then you have to explain it without what is the FC revaluation and what is the foreign currency transactions and what is the FC revaluation. Entire process you have to explain it.
Yeah. Yeah. Sure. No problem. Can I see a little bit notebook if you giving me the permission?
Okay.
Yeah. Okay. So firstly, we need to understand what is FCP. As I said that foreign currency means if when we are in India or our local currency is in INR, so company taking the local currency. So something taking for the valuation part as per the business requirement within an organization, we are using the INR in the local currency. Then client will do the same purpose, so but we purchases the product raw materials from another country. So but our company code is in India, but because that our local currency is in INR, so we can say that it is when we are purchases from another country and our local currency it is converted into the another country currency, that is called the foreign currency valuation. So basically, foreign currency valuation, there are two types configuration which should be maintained: foreign currency transactions and foreign currency revaluation. In foreign currency transaction, we need to understand that what is that? It means the month end rate. While we are posting and record the vendor invoice in the system on particular date, that is called the foreign currency transaction, and it is used by the end user purpose we can do it. But in foreign currency revaluation, we need to be understand all those criteria and all those configuration we have done, like valuation methods, valuation areas, and we need to assign the valuation methods to valuation areas. Like that, we can use it. So that is called the foreign currency revaluation. Here are we can maintain the unrealized gain or loss and realized gain or loss. What is that? In the month end, when we do the foreign currency revaluation, then we receive the gain or loss. This is called the unrealized gain or loss. But we are not paying the amount. It is used for the month end reporting purposes. It show in the particular transaction, and in the reporting purpose we are doing it. That is called the unrealized gain or loss. What is realized gain or loss? So when we are actually real doing the payment has been received from the customers or vendors on that day system, whether exchange rate gain or loss, that one involved be post in the entry in the system. So actually the amount to be calculated in the reporting purposes, that is called the realized gain or loss.
Okay, okay. One thing. I'm asking simple question. What is the FC revaluation? Why we can use the FC revaluation?
Okay.
You
So
explained all those things, so but simple thing. Why we can use the FC revaluation?
okay. So FC revaluation we are using, there are two types here, account balance revaluation and open items revaluation. So it is used for the,
Okay, okay. Okay, you carry on. I'll mute.
okay, sir.
Okay, explain it.
Okay.
You can
In
explain.
account, yeah, yeah. Okay, so in account balance revaluation, we have transportations like export, import, foreign currency that is used for the proper foreign currency loan. Then we have used the business purpose and to implement all those scenarios. So it comes under the FCV and open items revaluation. So it is already used process for the vendors or customers. That for it is also used for the export and import. For business purpose, we need to be currency purpose. We need to be used. That's why it is usable. So
That is, you told you are in mind exact answer, but you are not able to answering exact. Simply, foreign currency transaction means other than company code currency, whatever the transaction. If we are taking the loan from foreign banks or any customer and vendor related transaction belongs to other than company code, these kind of transactions we can treat it as a foreign currency transaction. So simple, clear everyone. And foreign currency revaluation is nothing but simply I'm taking one example. So this month first we are we are purchasing some goods and services from vendor. So that vendor located in US, right? So this month first we can purchase 1,000 rupees, 1,000 USD dollars. At the time INR price is one USD equal to 80 INR. So the invoice amount is 1,000 USD and 80,000 INR. Simple. So by month ending, management client requirement is I purchased 80,000 rupees goods and services from this month first. Now I am going to make the payment. Otherwise, next month first or fifth, I am going to make the payment by anyhow today. It means by month ending. So how much amount I have to paid exact? I need to pay exact that particular invoice because by month ending, if foreign currency revaluation exchange rates, it will be by first tarikh it will be 80 rupees and month ending it will be 85. Then automatically we have to pay extra 5,000 rupees particular vendor invoice. Like at the same way, dollar price is decreased 75. Then we will get 5,000 rupees discount on the particular discount invoice. So in between, whatever the transactions happen regarding this transaction relevant by month ending, how much amount we have to pay or we have to paid in additionally or less. So if you paid additionally, then we will get the exchange loss. If you paid less, then we will get the exchange gain. It means regarding the particular transactions, how much amount we'll get in the form of exchange gain, how much amount we will get in the form of exchange loss. These kind of information reporting purpose, we are using the FC revaluation. So you can understand. So clear cut answer you have to explain simply. Other than company code transaction, we can treat as a foreign currency transactions. So regarding these transactions by month ending, if you are getting any loss, any gain regarding these transactions, we can, if you want to analyze the report, then you can use the foreign currency transactions. So these transactions we have a realized, unrealized. Realized means after payment, if you want to generate the report, that is called as a realized. Unrealized means only reporting purpose, we can generate the report. So, but anyhow, by month ending, if you can run the report, system automatically divided realized and unrealized entry separate. So that explanation you have to you need to explain first one or two lines only. Then you can coming to the configurations. Sheetal, are you understand? You
Okay,
have a knowledge that one. But first thing is simply what is the transaction, foreign currency transactions, why you can use the foreign currency transaction. Within two or three lines, you need to explain clear cut. Then you will come to the configuration, what and all the required scenarios, right?
okay, sir. I will take care of it, sir.
Because I am
Yeah,
asking only what is foreign currency revaluation. In real time, also
yeah,
interviewer is asking what is foreign currency revaluation. So you have to explain
yes.
simple thing, but you are one by one you are going to open items, so account balance. This and all later step. If he is asking later step, then you have to explain.
Okay, sir. Sure, sure, sir.
So
Thank you,
okay,
sir.
then carry on. Okay, regarding that one, I'll ask different questions in FC only today, right?
Yeah,
Are you able to answer? Because
yeah,
I
no
understand
problem.
yesterday afternoon you will understand entire process, but in between the process, if I am asking different questions, you are able to answer or not, I am going to check it now. Okay.
Yeah, yeah, no problem.
Then, so what transaction scenarios we can use the FC revaluation? Explain. Just answer it. Two lines. What kind of the transactions?
According to the exchange rate type, we need to transaction ratio 1:1 as per the client requirement.
No, I am asking simply what kind of transactions, sir, not for buying, selling that one. Simply account balances and open item balances, customer and vendor transactions, bank transaction. These three transaction purpose we can use the foreign currency revaluation. You have to
Yes, sir.
understand how the interviewer is asking.
Yes, sir, sure.
Okay, next coming to, so what and all the GLs required for FC revaluation?
In real required, like in which type of GL required in the FCB evaluation?
Mm-hmm.
Uh, yeah, secured loan, exchange gain, exchange loss, balance sheet adjustment we need to create in the GL before processing the configurations.
Good, good. And coming to, uh, I explain the steps of FC revaluation process. Only steps only I'm asking. In-depth steps I'm not asking. Revaluation process, configuration, revaluation configuration.
Uh, Firstly, wait. Yeah. Firstly, we need to first step is accounting principles first, and again we need to define we need to create the valuation methods. Again, assign to the valuation method to accounting principle. Then we can go through the valuation area, then again assign to the valuation area accounting principle, because these are the interconnected with each other. And after that we need to check the leading laser, and after that we can go through the automatic for the FCV. Hello.
Okay. What is the valuation method?
So am I audible?
Yes, yes. What is the valuation method?
Okay, so valuation method is nothing but it means that uh, it defines the use for the principles determining the valuations of company codes and accounts.
Okay.
And it is a, yeah, that is called the valuation method.
What is the
And
valuation area?
uh, in valuation areas, we need to define the group valuations, and uh, it is wait, yeah, it defines the it can be do for the company code level, and it is manage the financial valuations for the valuation area and it is endorsed in the valuation methods, and it is defined to the company code, currency currency level also we need to define, that is called the valuation area.
Simple, in valuation area name only we have a area. So area means nothing but either if you it is either client requirement is it is company code currency level if you want to evaluate the transactions, or group currency wise if you want to evaluate the transactions. That's thing only.
Okay, sir. Okay.
Mm. And coming to okay. So where we can assign the where we can assign the account balances relevant to GL accounts. Like we have a KDB and KDF, right? In
Yeah, so
KDB,
we have,
what kind of transaction will assign? KDF, what kind of transactions will assign?
so in KDP we are assigning the in KDF we are assigning the open line items, and in KDB we are,
Okay, okay. KDB point of view, account balances, like how many term loans
yeah,
you have.
account, yes sir, KDB, yeah.
Okay, in KDB point of view, for example, we have a 10 foreign term loan bank accounts, right? So when
Yes.
we run the FC revaluation, how system it will be calculate, how the system it will be run the depreciation, run the FC revaluation for each and every GL wise. What is the key interlink?
Exchange rate key we need to maintain firstly according to the requirement,
Okay.
and yeah, and firstly we need to understand in which criteria we need to be mentioned why for an example we have created the GL. In GL, exchange loss, exchange gain also maintain. So after it we can go through the OBA1, and according to this method we can go through the KDB, and we have to assign all those scenarios.
Okay, I'm asking KDB only. So see, in KDB
In,
we have a uh, different checkbox is there. There we have to assign USD or whatever. So that
yes.
exchange rate difference key, again we have to go to the master data, GL master data. There we have to control data. We have to assign that exchange rate difference key. So then only in account balance point of view, system it will be identify and run the FC revaluation for all the term loan GL accounts. So in KDB, we can fix the form, like we can fix the configurations. That account determination, like whatever we define the key, that key we have to assign vendor GL master data. Clear? I think
Yes,
you
yes.
are aware that, right? So I'm asking
Yeah,
different questions. So right. So mostly
yeah,
50% of the interview they didn't give time end to end, right? Some of the
yes.
interviews they are asking how I am asking like that they are asking different questions. Okay, then KDP where we can assign the balance sheet adjustment account.
We need balance sheet adjustment account. Uh, we need to assign SM35.
Balance sheet adjustment SM35. What is the link title?
Uh, uh, no, sir, no, sir.
KDB only we are assigning exchange loss, exchange gain, and balance sheet adjustment account. KDF.
Yes, the three things is also in does in
KD
KDF. So,
open item point of view, we need to assign three GL accounts: so exchange loss, exchange gain, and balance sheet adjustment. And account balance point of view, only two GL accounts. So clear?
yes, so
Hmm. Okay. Then coming to realized. Realized means already invoice done, payment also done. So then
yes.
month ending FC revaluation come done. So if we are getting loss from vendor point of view, account balance point of view, in vendor point of view, how
Yes.
entries it will come.
Entrance will come for the
Okay. After FC run, what and all the entries it will generate? Explain about the entries.
After FC run, what entries will be generated? Okay. So I just forgot.
Did you listen all the videos? Did you
Yes,
watch all the
sir.
video?
Yes,
So how
sir.
entries it
Previous.
will come?
Uh, Go through the. Firstly, we need to do that the FAGL and FC T code.
Okay. User point of view will run the T code. ECC point of view FAGL underscore FC underscore VAL, and as per HANA point of view FAGL underscore FCV. That's okay. Where we have to assign the required fields and update the FC revaluation. So once revaluation done, how the entries it will be generated? If you are getting exchange loss, what kind of entries it will come? If you are getting loss exchange gain, what kind of entries it will come? Under the accounting balance point of view. And okay, let me open your Excel sheet.
Yeah, yeah, definitely. Yes,
See,
sir.
one thing she tell nowadays market position is very tough, right?
Yes,
Recently
sir.
I look in Naukari account. So one job 5,070 people applied.
Yes, sir.
One 4.5 years one consultant job. Not only that job,
Yes,
all the jobs like same thing only apply. 2,000, three
yes,
thousand. One vacancy is 3,000, 4,000. So based on that, how much you have to increase our knowledge, then only we will be crack the interview.
yes, sir.
Just go down,
I got it.
go down. That is the entries. Wait, wait. Scroll up, scroll up. Okay, okay, okay. Is there here? How entries will going on? Just
Okay, sir.
just scroll down a little bit. Wait, wait. See how entries will going on. Loan taken from bank. Explain it.
When loan taken from the foreign bank, so bank account debited to foreign currency loan account credited. When foreign currency revaluation entry in account balance, so exchange loss account debited to term loan account credited. Uh, and while is it in exchange gain also was happening, so here is accounting entry exchange term loan account debited to exchange gain account credited. Then open item hello.
Yes, yes.
Open item revaluation. In this FC revaluation, SAP introduce a balance adjustment account. So here is unrealized entry in loss, exchange loss account debited to balance sheet adjustment account credited. Here is gain, balance sheet adjustment account balance sheet adjustment account debited to exchange gain account credited. Realize the entry. Here is accounting entries. Exchange loss account debited to original reconciliation account credited, and original reconciliation account debited to exchange gain account credited.
Okay. Minimize the screen and explain it one more time.
Yes, sir.
Now we
When
can
bank,
explain.
yeah,
Okay, I'm
bank,
asking one by one. If you are taking the loan from US bank, what is the entry?
so bank account debited to FC loan account credited.
Okay. Uh, okay. So once you can run the FC revaluation in term loan point of view, if you are getting the loss, what is the entry?
If you are getting so term loan exchange loss account debited to term loan account credited.
Good, good. And if you are getting profit from term loan scenario, what is the entry?
So term loan account debited to exchange gain account credited.
Hello.
Yes, sir.
Term loan
Hello.
account. Open the Excel sheet.
Debited. I think it's just opposite. Exchange gain account debited to term loan account credited.
See, one thing
Yes.
simple. Even term loan scenario, account balances like vendor and customer, any scenario. Okay.
Yes,
Hello.
sir. Yes, sir. Yes, sir.
Any scenario, if we are getting, once again, term loan point of view, to exchange loss account credit to term loan account credit. Okay. Whenever we are getting the loss, either term loan point of view, account balance open item point of view, loss always comes under the debit only. Then opposite particular GL account, it will be appearing. For example, here exchange loss account debit to term loan scenario. Okay. Exchange loss
Okay.
account debit to term loan account credit to. So loss always debit, gain always credit to. Simple thing. So loss
Okay.
always debit, gain always credit to. FC point of view, only term loan it will be appearing, right? So exchange loss account debit to term loan account credit to. Then if you are getting loss, exchange gain account debit to, sorry, term loan account debit to, exchange gain account credit to. So simply when wherever loss comes, exchange loss debit, wherever gain comes, exchange gain GL account debit credit side. So in between, based on that remaining GL account, it will be updated. So term loan scenario, only term loan or term loan GL account or exchange loss or exchange gain account. These three GL accounts only involved, term loan scenario. Coming to open item point of view, open item point of view.
Yeah.